Hello and welcome to this video. In this video, we are going to do a question from paper 3, variant 32, May-June 2020. Question 3 based on not-for-profit organizations. The question states that J Club prepares its accounts to 31st December annually. It also runs a shop for the exclusive use of its members. All shop sales are made on cash basis. The shop takings are banked on the same day. The summary of the bank statement for the year ended 31st December 2019 is as follows. The bank balance at 1st January is $9,850. Bank, all the receipts are subscription which is received and the amount is $78,650. Shop takings is $49,200. And bank payments where we have club administrative expenses which is $78,600. Shop wages which is $18,700. Shop expenses which is $9,400. Shop purchases which is $15,100. Bank balance at 31st December is $15,900. The following balances are also available 1st January 2019 and 31st December 2019. Shop inventory is $1,300 and $1,100. Shop trade payables are $2,740 and $2,810. Subscription due is $1,600 and $1,900. Subscriptions in advance is $1,200 and $400. Club equipment cost is $40,000 and $40,000. Accumulated depreciation is $32,000 and question mark. The bank reconciliation statement for the month of December 2019 showed that $870 representing the shop taking on 31st December 2019 has not been credited by the bank. The depreciation on the club equipment is to be 20% per annum using the straight line method. And in the A bit of the question, we are asked to prepare a statement to show the shop's gross profit and the profit for the year ended 31st December 2019. Now let's calculate the gross profit. We will start with the shop takings, and for this the receipts in the bank is given as $49,200 plus this $870 which is also for the shop takings. However, this is not credited by the bank yet, but this is for the period of year ended 31st December 2019, hence we will add it. So we will get $49,200 plus $870 which will be $50,070. Then we will calculate the cost of sales. For cost of sales, we will start with the opening inventory which is given as $1,300 plus the purchases where we have the purchases by bank and we have it in the payments which is given as $15,100, and then the credit purchases which we get by taking the closing trade payables which is $2,810. From there we subtract the opening trade payable which is $2,740. So we'll get this 70. So when we take $15,100 plus $70, we will get the total purchases as $15,170. Then we will subtract the closing inventory which is given as $1,100. So now our cost of sales will be $1,300 plus $15,170 minus $1,100 which will be $15,370. And this cost of sales will be subtracted from the shop takings which was $50,070. We will get the gross profit as $34,700. From here we will subtract the overhead expenses so that we can get the profit for the year. For this, what is mentioned in the bank at the payment as $18,700 was shop wages, as well as there was shop expenses of $9,400. So when we subtract this from $34,700, we subtract $18,700 and $9,400, we will get the profit for the shop for the year ended 31st December 2019 as $6,600. In the B bit of the question, we are asked to prepare the club's income and expenditure account for the year ended 31st December 2019. What is the main source of income for a club? The main source of income for the club is the subscription. This is the membership fees which the members pay to be the part of the club or to be the member of the club. And for this, what is mentioned was In the bank receipts, the subscription which was received was $78,650. And then what else was mentioned? It was mentioned that subscription in advance on 1st January 2019. This is the first day of our current financial year, and this was already paid in advance. From when? It was paid in advance in 2018, and hence it is brought down as subscription paid in advance on the first day of the current financial year. So as it was paid in 2018 and this was the advance which was paid in 2018, which means that this was the subscription which was for the period of 2019, and as we are making the income and expenditure account for 2019, hence this should be added. Then the subscription pay in advance which is on 31st December 2019. This is the last day of our current financial year, and this is in advance for which period? For the period of coming financial year, that is for the period of 2020. So as it is for 2020 and it is not for 2019, and we are making income and expenditure account for the year ended 2019, hence this need to be subtracted. Okay, that is what I have done here. Then subscription due. Due means it is outstanding, it is not paid. On the 1st January 2019, this is the balance which have been brought forward from 31st December 2018. It was due at the last day of the previous financial year. So for which period it will be due? It will be due for the period of 2018 and not for the period of 2019, for which we are making the income and expenditure account. Hence this should be subtracted, which I did here. And this one, that is on 31st December 2019, this subscription was due, outstanding, or not have been paid, and this is the subscription which have to be paid in the period of year ended 31st December 2019, for which we are making the income and expenditure account. This is due for the current accounting period, and as it is due for the period for which we are making the financial statement, hence this should be added. So add 1900. So when you add and subtract, you will get the subscription for the year ended 31st December 2019 as $79,750. Then to this we will add the shop profit which we got in the bit A of the question as $6,600. So this will be the total earning of the club, which is $86,350. And from this we will subtract the expenses. The administrative expenses which was given was $78,600, and the depreciation, it was mentioned that the cost of the equipment was $40,000 and the rate of depreciation was 20% on the straight line method. So based on straight line method we will calculate this depreciation on the cost. So if you calculate 20% of 40,000, it will be $8,000. So when we take $86,350, from there we subtract $78,600 and $8,000, we will get the deficit for the year, which is $250. In the C bit of the question, we are asked to prepare the statement showing the movement in the club's accumulated fund for the year ended 31st December 2019. To show the movement in the club's accumulated fund, first we have to calculate the opening accumulated fund, which is the accumulated fund at 1st January 2019. To this we add the surplus for the year if we have the surplus. However, in this question we have deficit for the year, hence we will subtract it. We will get the closing accumulated fund, that is the accumulated fund at 31st December 2019. So to begin with, first we have to calculate the accumulated fund. What is accumulated fund? When we are dealing with sole trader or partnership, we call this as capital. However, when we are dealing with not-for-profit organization, the term used for capital will be the accumulated fund. And how do we calculate the capital? We know from the accounting equation, that is assets is equals to capital plus liability. If we take the liability to the other side, it will be capital will be equal to assets minus liabilities. So here we will take all the current assets, then the non-current assets, and subtract the liabilities so that we can get the accumulated fund. Here we will start with the accumulated fund, which is on 1st January 2019. So all the balances which we will mention first will be for the balances which are mentioned on 1st January 2019. We will start with the bank balance which is on 1st January 2019, and that is $9,850. Plus we have the shop inventory which is on 1st January 2019 as $1,300, plus the members subscription due which was on 1st January 2019 as $1,600. So these are all our current assets. Then we will go for non-current assets, where we have the club equipment and the cost value is $40,000. However, we take the net book value. So for this we will subtract the accumulated depreciation, which is $32,000. So now we will get $8,000 for the club equipments, and then these are all the assets. Now we will subtract the liabilities. For liabilities we have the trade payables. On 1st January 2019 the value was $2,740, and the subscription in advance on 1st January 2019 was $1,200. Now after adding and subtracting, we will get the accumulated fund at 1st January 2019 as $16,810. From here we will subtract the deficit which we got it in the B bit of this question, which was $250. So when we subtract $250, we will get the accumulated fund at 31st December 2019 as $16,560. In the debit of the question, we are asked to state four differences between the financial statement of a limited company and the financial statement of a not-for-profit organization. There are various differences between the financial statement of a limited company and the financial statement of not-for-profit organization. In the financial statement of a limited company, we make the income statement, we make the statement of financial position and the statement of cash flow. Whereas when we go for the financial statement of not-for-profit organization, we make the income and expenditure account, which we did in the bit B of the question, and the statement of financial position. Then in case of the financial statement of limited company, from income statement we calculate the profit or loss for the year. Whereas when we make the financial statement of not-for-profit organization, for profit we term it as excess of income over expenditure, and for loss we term it as excess of expenditure over income. And when we make the financial statement of a limited company, we call the capital as equity, whereas when we make the financial statement of a not-for-profit organization, as I have mentioned in the bit C of the question, we call the capital as accumulated fund. And when we make the financial statement of a limited company, we prepare it from the trial balance. First we make the trial balance and we check all the adjustments, and on the basis of that we make the financial statement of a limited company. Whereas as we have seen in this question, when we make the financial statement of a not-for-profit organization, we prepare it from the receipts and expenditure account, where we have here in the bank all the receipts were given and all the payments through bank was given, and that is the receipts and expenditure account, and from there we make the financial statement for a not-for-profit organization. Furthermore, additional information is provided which states that all the club's equipment was purchased on 1st January 2015 and the replacement cost of the club's equipment is $50,000. In the EBIT of the question, we are asked to analyze the club's ability to replace the club's equipment in 2020. If we see the cost of our current equipment, it was $40,000 and the accumulated depreciation on 1st January 2019 was $32,000, and the depreciation for the year ended 31st December 2019, which we calculated 20% of the cost was $8,000. So on 1st January 2020, what will happen? The cost will be 40,000 as well as the accumulated depreciation will be 40,000, which means that we have completely used this club's equipment and this is the final year of the useful life of the club's equipment. And to replace this, what they have? If we see the bank balance which was given on 31st December 2019, it was $15,900. And in the additional information, it was mentioned that one check which was not credited by the bank on 31st December 2019 was $870. So if we add this up, on 1st January 2020, we will have the bank balance as $16,770, which is not sufficient for the purchase of an equipment which will cost us $50,000. They don't have any other cash which is available in the business which they can use to purchase this equipment of $50,000, as well as they don't have any short-term investments which can be easily converted into cash, which we call as liquid assets. They don't have any liquid assets which can be easily converted into cash to purchase this equipment of $50,000. So what they can do, they can purchase this equipment on credit or on hire purchase and make the payments of the installments, or what they can do is they can take a bank loan, or they can ask the members to contribute for this equipment so that they can get the equipment which is required for the club on 1st January 2020. Furthermore, we have additional information which says that the treasurer of the club proposed that the club could increase the member subscription fees to finance the replacement of the club equipment. In the F bit of the question, we are asked to discuss whether or not the club should increase the member subscription for this purpose, and we have to justify our answer. Your answer should be based on your point of view. From my point of view, I would suggest that they should not increase the subscription, because you see the fees which they have to pay, that is the subscription fees which the member pay, it is paid mostly on monthly basis, and they require this additional cost only for purchasing the club equipment, which is a one-time investment. And if the members are asked to pay it on monthly basis, then the members may leave the club because they are not obliged, or it's not the obligation of the members to pay additional amount for purchasing the equipment, and hence as they are not obligated to do so, they may leave the club. So instead of doing that, what they can do is they can take the other ways of long-term finances, which can be here, as I've already mentioned, the bank loan. But they can't go for a bank loan because bank loan require a collateral or a security, and they don't have any assets which can be used, that is any non-current assets which can be used as a collateral or security. So the best alternative what they can do is they can ask for donation from the members for this equipment, or if the members are not ready to give them donation, they can ask for an interest-free loan from the members, and this can be repaid back from the subscription, which will be the best alternative for the members as well as for the club, because in this way the members will be still retained in the club, as well as there will be finance available for the payment of the new equipments. So with this, we have completed this question. Thanks for watching my videos and have a great life.